Another jump in Eurozone interest rates. The European Central Bank has raised them by another half a percentage point in its ongoing fight with inflation in the double figures. The hike is smaller than the last increase, but it's unlikely to be the last. The ECB says it's playing the long game.
The European Central Bank on Thursday raised its key interest rates once more. Leaders remain determined to cool the red-hot inflation across the Eurozone. The ECB hiked its main interest rate by 0.5% to the level of 2.5%. ECB Chief Christine Lagarde signaled more hikes could be on the way, if price rises don't start to level off.
In particular, we judge that interest rates will still have to rise significantly at a steady pace to reach levels that are sufficiently restrictive to ensure a timely return of inflation to our 2% medium-term target.
The Eurozone is not alone. In the United States, the Federal Reserve raised its benchmark interest rate by another half a point, pushing the bank's key rate to a range of 4.25% to 4.5%, which is the highest level in 15 years. Meanwhile, the Bank of England also raised its rates by a half percentage point. It's the bank's 9th consecutive hike as the UK battles not only inflation but also a cost of living crisis. As Lagarde points out, the ECB's goal is 2% inflation. But that objective is flying in the face of rising costs that are squeezing Europeans harder by the day. The war against inflation is looking to be long and painful.
So investors are now digesting rates hikes by both the ECB and the Fed. Let's cross to our Wall Street correspondent, Jens Korte. Jens, 24 hours ago, you told me that Wall Street would need to sleep on yesterday's Fed decision. 24 hours later, what's the verdict?
Well, I'm not so sure if investors will have a good night's sleep tonight, because we did see some pretty steep losses. Blue chips down by more than 760 points, so down a good 2%. And the combination that we're seeing right now is not really ideal, not in Europe and definitely also not here in the United States. So interest rates are on the rise. They will continue to go higher. At the same time, we already see signs that the economy is losing steam. We got, for example, the latest figures on retail sales here in the United States. They dropped double what analysts had estimated. We also got weaker figures from the manufacturing index. So all of that at least points to a possible recession, while, as I said, at the same time, interest rates are going up.
As for the Federal Reserve and the ECB, they have made similar moves, or identical moves indeed, the last couple of months when it comes to interest rates. But are they actually facing the same challenges?
Well, I mean, if you talk about inflation, and that's what it's all about, right? So there are some differences between Europe and the United States. Basically, in the US, it's labor, so wages are increasing. And in Europe, it's mostly energy with the war in the Ukraine and the measures against Russia. So that is one of the big differences. There are also some similarities. One of the things that I see is a lot of companies are seeing cost pressure, and what they do, they increase prices. But in some cases, prices, in my opinion, are going much higher than justified. And that's also adding, for example, that food prices are on the rise. And that is true in Europe and in the United States.